This is the Global Miranda Minor Group, our home of the culture of Malasakit. This is the Global Miranda Minor Group, our home of the culture of Malasakit. This. Subscribe, like, follow, and share. Sige na please, Ka Miranda. Subscribe, like, follow, and share. Sige na please, Ka Miranda. Ladies and gentlemen, allow me to introduce to you the one and only, the voice that introduced, pitikin kita sa ilong, isang hampas na lang ng palakol, the power of yet. Please, let's give it up to our pambansang crypto coach, Coach Miranda Minor.
All right. Hello mga Kamiranda. This is Coach Miranda Minor and welcome to our awesome discussion today where we're going to be talking about the market drivers affecting Bitcoin, gold, and oil. No, this is a very, very good discussion because we have invited awesome folks to be in our show, even better than Coach Miranda Minor, and I'm very, very happy that we have them in our show. A couple of things, Kamiranda, that I'd like to make sure that everyone understands that tonight's event is going to be a discussion. There's going to be no investment advice on this particular show. We're going to be creating analysis and comments on the price movement of a specific asset. And of course, as you guys know, I'm a coach on cryptocurrency, but this time we're going to be covering, more than crypto. We're going to be covering gold, right? And of course, oil. Let's all make sure that obviously everything you're going to be hearing here is not a financial advice. We want to make sure that you do your own research on everything that you're going to be hearing. And of course, let's all learn from our guests for tonight. No, I'm very, very happy because these folks have been in the market for quite some time. They've actually been understanding the market and the macros of it as it affects those assets that I've mentioned for quite some time already. And without further ado, I would like to introduce to you our guests for tonight. There you go. We have Inki and Xing. Hello, Inki and Xing. Please say hi to our audience.
Hello everyone.
Hi guys,
Hello.
here.
All right. Okay, let's do ladies first. Xing, talk to us in what you do and how long have you been in the market, if you don't mind.
Yeah, sure. So for me, I'm a market strategist with Exness, and I've been in the market for more than 5 years. And I really started out in this journey just because of my interest in technical analysis. So that was what kickstarted this journey. And then I work with different partners in terms of providing market research. Yeah, so I'm also CMT and CFP charter holder.
Whoa, love it. Oh wow, I would love to have those titles soon as well. I'm a CTA, Certified Technical Analyst, but I don't have your titles yet. Let's now go. Nice to meet you, Xing. And Inki, talk to us about what you do, sir.
Yeah, thanks for having me, Coach. My name is Inki, and I'm a senior market strategist in Exness, and I have been in this field around about 8 years. And compared to Xing, as Xing is the hero of technical analysis, my base is in macro fundamental analysis. First, I was in the research company, and the second, I was in the family office and the prop trader. And finally, I'm in Exness as a financial market strategist, doing the webinar, writing the report to the clients and traders, to let them understand how the market goes and to let them understand how we provide how to settle up the trading strategies. That's what I'm doing right now. Yeah.
Nice. Very, very nice. I'm sure you guys have been in the market for quite some time with so many experience. So we have a very, very interesting topic today. And as I've said, Kamiranda, if you're watching today, again, the information that we're going to be presenting here is for your informational purposes only. Please do not construe this as an investment advice and an offer of solicitation for any transactions for any instruments, mga Kamiranda. Please make sure you understand that. Okay, so let's go. So we have three instruments today or assets: Bitcoin versus US dollar, right? Which is everyone's crazy about right now. And I was just talking offline with some of you earlier, and really really good notes that we have compared. I'm happy we're all aligned, right? I mean, offline we're conversing already, and we're gonna be talking about U.S. oil, crude oil, and we're gonna be talking about, of course, gold versus U.S. dollar. So, Kamiranda, if you're ready, of course, we're actually streaming live in Facebook, in YouTube, in Twitter, and of course also in TikTok. Please type number one if you can hear me well, you can hear us correctly, or you can see us, very, very nice with our audio and video. Please type number one, Kamiranda.
You are listening to Coach Miranda Minor in his daily crypto live.
All right, let's all go dive in, and just a little bit of our top story. Let me just try to play the stinger. Just give me 1 second. Let's all discuss all of the worthy issues ngayon sa ating market. This is Coach Miranda Minor Reacts. Tutok na! Okay, a very, 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 very hot topic in the cryptocurrency market. Right? I would like to understand Bitcoin USD versus US dollar. Anyone can answer first. What is the main driver behind the price movement of Bitcoin today?
Okay, so I'll take the question. Right, so if we take a look at Bitcoin in general, I think the price movement that has been driving Bitcoin, I'll break it down into three factors. Right, the more recent one we have would be like the Mt. Gox repayment. Right, so Mt. Gox itself, it's actually a Tokyo-based exchange. So they went bankrupt after a hack. Right, so they are repaying users at about $9 billion worth in terms of Bitcoin. So you have a lot of coins that's hitting the market. And because of this massive repayment, it also lead to concerns in terms of the sell-off. And that's also part of the reason why it's putting downward pressure on Bitcoin prices. So I would say that's the first reason, right? Of course, other drivers that we have, this is more long-term, would be the institutional investments, right? So we can see that there was a launch of the Bitcoin ETF this year, right? To open up a lot of new avenues in terms of investment in Bitcoin. So for this, it actually makes it easier for investors to gain exposure to the cryptocurrency, right? And so the demand that we have from institutions, right? We have companies like MicroStrategy, Tesla, Square, right? They have invested heavily in Bitcoin. And MicroStrategy itself, I think they're holding over $7 billion worth of Bitcoin. Right, so that also helped to boost the demand for Bitcoin, and in general, it's seen as a vote of confidence in terms of the Bitcoin store of value. Mm-hmm. So I would say that is another factor, right? And then, of course, the most important one that we have actually, I think now it's actually overshadowing the market, right? It's actually the market sentiment that we have, right? So not just for Bitcoin, but in general, right? The market risk appetite. So we can see that for Bitcoin, right, they have a limited supply at about 21 million tokens. Right, so it's also sometimes seen as a digital gold, but unlike gold, right, Bitcoin itself, it's very volatile in nature, and it's also seen more as a risk asset. So when you have very extreme risk sentiment coming in, right, it also means that the cryptocurrency is susceptible to market fluctuations. Mm-hmm. So when investor sentiment is lower, right, investors are more cautious during times like this, Bitcoin may come under pressure.
Very nice. Thanks for those. So market sentiment, institutional investments, and Mt. Gox repayment. So, you have anything to add there, Inki? We're good. So, just a follow-up question there. How are those macroeconomic factors like inflation, can add to the and of course interest rates, the one that we're talking about offline earlier, right? So it's interesting. I know the payroll came out earlier, just a few minutes ago. It's quite interesting. How are those going to affect? Kamiranda's are aware of this, but I'd like it to come from you. How is it going to affect the price of Bitcoin?
Okay, so for this, right, I think what's important to understand the link between inflation and interest rates. So in general, we can see that, when inflation is high, then that would lead to central bank just raising interest rates to curb this price pressure. And then that's what happened between like 2021 to 2023. And in our current market landscape, we can see that inflation is slowing, right? We have the US labor market, like just what you mentioned, right? So the jobs data are softer. And then we also have expectations that are growing that Fed is going to start cutting rates in September. So with all of this on the table, right, this is significant in terms of the impact on Bitcoin, right? Because if you have lower interest rates, it will reduce the cost, the opportunity cost of holding onto Bitcoin. Right, so this, I think a big part of it really depends on the economic outlook. So in general, right, like what we covered, right, a part of it's also on market sentiment. So investors, if they're more optimistic on the market outlook, it could benefit Bitcoin. Whereas if they're more cautious, right, that will also weigh on Bitcoin prices.
So on
Yes.
that, yeah, go ahead, finish your thought. Sorry.
Yeah, so like in terms of like inflation, right? So in general, when inflation is coming down, it leads to lower interest rates that could impact Bitcoin in a positive manner. But a big part of it, we have to actually see if it's actually in line with the general narrative of the economy. So if the economy is slowing, right, investors are more cautious, that would actually weigh on Bitcoin prices.
That's a very good point, right? It's not always just the interest rates, right? You need to weigh in the economic narrative, the sentiment of the market as well. There's a lot of other factors as well. So, on that note, what is your short term and long term outlook for the price of Bitcoin?
Yeah, absolutely. I think that in general, Bitcoin's bullish momentum might slow slightly, right? At least in the short term. And also part of it driven by this risk aversion that we're seeing in terms of the market sell-off, right? So we also have tensions that are escalating in the Middle East, right? And on top of that, with the tech sell-off, I think investors might be slightly more cautious in terms of the lofty valuations we're seeing in the equity market, and also just reassessment of this whole AI narrative. So I think that could lead to a bit of a pullback in Bitcoin in the short term. But I would say that in the long term, right, I'm still pretty bullish on Bitcoin. I think that we could see further gains down the road, right, driven by mainly increased adoption. So we talked about institutional investments earlier, right, and I think that that also helps in terms of like mainstream acceptance of the cryptocurrency. Right, I would say one example would be we see that Russia recently announced the plans, right, to allow crypto payments in international trade to counter sanctions. So that's another use case for Bitcoin. Right, so we could see some short-term volatility, but I do think that the long-term trend for Bitcoin is going to be slightly higher. And then we have more companies and countries adopting it, so this could actually support Bitcoin prices.
No, I like that. Just on my personal comment, I like what you mentioned about Russia allowing crypto payments. It's about time, right? I mean,
Yes.
2022 during that war, they were just removed from the monetary, cross-border payments. So they need to get ready, right? Otherwise, ruble is their currency, right?
Yes.
Will
Yeah.
will diminish again. You know what I mean? So, all right.
Exactly.
So I like it that you said short term we'll see some retracements, but long term we'll see some potential gains. So short term, long term, what are those potential economic events and other events or announcements that you think can potentially impact the price of BTC USD?
Yeah, so I think one that is very heavily watched by the market right now would be the upcoming US general election, right? So that will probably have an impact on Bitcoin, right? So right now we are seeing, the race, presidential race, and if we see former President Donald Trump, he's a pro-crypto candidate, right? He mentioned that in his speeches as well. So if he wins the presidency, his stance on cryptocurrency would likely be more positive, right? So this could actually help be a tailwind in terms of like for Bitcoin. So if Trump does win the election, I think that his pro-crypto stance, right, could actually increase adoption and also maybe more favorable regulations for the cryptocurrency, right? So in general, I think a lot of it, while we do take a look at the US general election, it also boils down to the actual policies that would be implemented if he does take office.
That's a very good point, right? Because him winning is good, but you need to know who the guy is, right? Based on historical performance, right? Of course, they say historical performance doesn't guarantee future performance, but then again, these are people, not markets, right? Right? Interesting. Yeah. So you have U.S. elections. I know I'm on the same page with you there. My team has seen, one of the weekends, when there was this narrative against Biden in that most recent U.S. debate, and just because people were thinking, oh, he's going to be out of the race, then Bitcoin start pumping, and then when Trump came into the picture with the Nashville conference, Bitcoin even hit 70,000 tops, right? So, I see volatility there. I see some potential. But then again, you're right. We need to kind of put a disclaimer that obviously it will depend on the policies to be implemented. I think he's focused on the regulatory clarity and regulatory environment for crypto, which is obviously what's driving some negativity in the market nowadays, right?
Yeah, absolutely.
Right. Okay, so thank you for that awesome information, leasing. I learned a lot about obviously Trump, short term outlook, long term. You also have interest rates. If I could just add right there, obviously, Miranda, I just looked at the FOMC watch, and we're just looking at it yesterday or last week. I realized that it has significantly changed because prior the Fed meeting with Powell, August 1st, 2 in the morning Manila time or Singapore time, it was almost 80% skewed to the 25 bips reduction. Right now, it's already 70 plus percent forecasting a 50 basis point reduction on interest rates. Crazy, crazy. So apparently, what's potentially going to be happening, and I just realized this is my opinion, not them. So Miranda, if 25 bips happen, it could be priced in. But if they put a 50 in the picture, and of course the payroll hours or payroll numbers came in earlier, it's already helping the narrative of a rate cut this coming September, right? So should we say wake me up when September ends already? Because it's gonna be good. Should I wake up when September ends? We'll see. Oh my God, 50, 50. I did not know 50 na. Crazy. All right, it's interesting. Okay, let's talk about. So I wanna talk to Inki now. Thank you about that, leasing. All right, Inki, I wanna talk to you. Let's talk about something that I don't discuss at all in our Camiranda community, and I want to learn from you. Let's talk about U.S. oil and the crude oil, right? There's a lot of geopolitical events happening right now in the market. How are the recent events affecting U.S. oil in the market?
Well, before I explain about the geopolitical things, I want to explain about the price volatility of the current oil prices, because oil prices, as you might know, exceeded the $90 level around October last year. And after the geopolitical concerns that were provoked in the Middle East intensified significantly as well. And after experiencing many ups and downs, oil prices soared back significantly again to $75 last April. And although the conflict between Israel and Palestine still continues in Gaza Street, the impact of these geopolitical factors on oil prices appears to be decreasing gradually, actually. But from now on, it is very necessary to pay attention to the possibility of a ceasefire agreement, a stop of a war between Israel and Palestine. If a ceasefire is reached, the geopolitical risk premium on oil prices may decrease significantly, leading to further declines in oil prices. Of course, as the market is currently focusing more on the economic situation in the United States and the economic status of the China, and whether central banks will cut the interest rate rather than factors of the real geopolitical risks, it seems necessary to pay more attention to the demand and supply dynamics of oil in the future regarding the major countries' economic situation.
Interesting. I like it when you said about obviously supply and demand, right? There's tensions, geopolitical tensions. People might hoard oil that can influence the supply of oil. Therefore, the price of the oil can go higher. I remember 2022, we're looking at the price of oil as well. Correct me if I'm wrong. It even hit $100, isn't it? No.
Correct.
It did, right?
Yes.
Right. So it's crazy. And the price in the Philippines, when it hit $100, the price in the Philippines was almost $2 a liter, which is around $8 a gallon. Crazy. Crazy in the Philippines, right? And we were like, oh, what's going to happen? And see, that's how it affects local prices. And I was like telling my dad, oh, you need to gas up a full tank already because it's going to be increasing anytime soon. How did you know? Of course, I'm observing global crude oil price. I was like, okay. Lo and behold, the price of oil in the Philippines went up. Gasoline, right? So it's interesting. All right. So you spoke about Inki on the supply and demand in the market, which I'm very, very interested because obviously it affects the price, right? Whoever's holding the oil can obviously influence the price and what have you. Talk to us about the current supply and demand dynamics of crude oil in the market, please.
Okay, in terms of this, the recent hottest topic, I mean, the very hot potato in the current market is the continuous decline in Chinese oil import volume. And this is because oil prices show great volatility depending on whether the oil import from China increase or decrease, as China is the world's largest crude oil importer. And China was expected to account for more than 50% of global oil demand from this year. But with the economic growth slower than expected, the balance of oil demand and supply could change dramatically. Recently, as you might already know, the PBOC, People's Bank of China, suddenly cut the LPR, which is the interest rate of China, to stimulate the economy. But it did not raise expectations enough for boost up the Chinese economy. So considering the situations that I mentioned above, it may take a certain amount of time for the Chinese economy to recover to the normal status. And as a result, China's demand for oil may also continue to decline, and it may have a negative impact on oil prices as well.
Negative meaning when the demand is lower, they can lower down the price of oil.
Yes, that's true.
Got it. Understood. All right. It's interesting. Right? Interesting. No, I remember that because obviously I'm also trading stocks in the Philippines, and whatever China does, the superpower and one of the superpowers in here in the bigger economies in Asia, I would rather say that it influences the performance of Philippines, right? If they cut rates, right, to stimulate their economy, then Chinese stocks or Chinese-owned stocks in the Philippines are rising, right? I've seen that, no. But to your point, you're right. It did not really do its job for the most part in stimulating the economy. So we have OPEC, which is obviously in charge on making those decisions. How do you see that OPEC decisions influenced the price of oil most recently in the market, Inki?
Yeah, for the U.S. oil trader the decisions of the OPEC is tremendously important, very important. So last year and this year, OPEC continued to reduce oil production. And this can be seen as an intention of them to increase the oil prices by reducing the volume of oil supply. But as oil prices have recently shown a continuous decline due to the economic slowdown in China, as I mentioned above, and some kind of possibility of a decrease in geopolitical risks, doubts about existing production policy, the production cut policy of the OPEC appears to be merging with inside of the OPEC as well. So based on the data, OPEC is reducing production. I'm actually looking at the data right now. OPEC is reducing production by a total of 5.86 million barrels per day, according to a series of agreements at the end of 2022, and announced at its last meeting in June that they would extend the production cut policy until the end of next year. But according to sources, OPEC will gradually phase out the production cuts over about a year, from October this year to September next year. So it is very important to the oil trader, as I mentioned above, that this kind of events could put direct downward pressure on oil prices as well.
Interesting. So they need to be cautious on if they're holding oil in their portfolio. So, I'm learning a lot, Miranda. I hope you're learning as well. Type 1 if you're in TikTok, if you're in Twitter, if you're in Facebook, if you're in YouTube, please type number 1 if you're learning a lot. So just a couple of summary before I go with my next question, Inki. What I learned so far, Miranda, on the Bitcoin side, I learned that obviously election in the short term can affect. It's on November 5th. You have Mt. Gox, obviously from a distribution standpoint of those Bitcoin. You have the limited supply, 21 million. You have institutions. You have your Bitcoin spot ETF. You have your interest rates coming into the picture. Interest rates, obviously, you have a potential 50 bips this coming September FOMC meeting, and obviously 25. Does that mean 25 is already should be expected, and we're expecting 50? Something to think about. These are obviously affecting the price of Bitcoin in the short term and long term standpoint, and of course, it depends on the narrative that we have in the market, or whatever the prevailing sentiments are. And in oil, this is an aha moment for me, right? So I learned that obviously you have your China demand that can influence. You have your demand and supply. You have OPEC policies. So if I'm trading oil, then I need to be on the lookout for those types of red flags, right? So OPEC policies pronouncements. You have your China demand, obviously the demand and supply, and obviously the tensions in the geopolitical tensions around the world, right? So on that note, speaking of future policy changes, so Inki, another question for you: how might future policy changes in major oil-producing countries affect U.S. oil?
Okay, so as the probability, I mean the likelihood that OPEC will gradually stay away from its production cut policy from the end of this year, the market's attention is diverging, transferring to the status of the United States economy, and at the same time, as I mentioned above, Chinese economy. So from now on, whether the Fed will cut the interest rates and concerns about a U.S. economic recession and the results of the upcoming U.S. presidential election, as Xing just mentioned, will cause significant volatility in oil prices. And currently, expectations are gradually rising about the Fed's rate cut. And if the Fed lowers interest rates starting from September, as I mentioned previously, this could further weaken the dollar, and it could cause oil prices to strengthen in the short term. You guys have to remember, this is just a short-term perspective. But however, we need to keep in mind seriously that the central bank's rate cut, I mean, the Fed's rate cut is a measure to stimulate the economy, which can be interpreted differently to mean that the U.S. economy is heading towards a gloomy state. In other words, if signals continue to appear that the U.S. economy is slowing down in the future, oil prices are likely to continue their current downtrend persistently because of the lower demand in China and, of course, lower demand in the United States as well. And as mentioned previously, it is also very worth noting that Donald Trump's probability of winning the presidency is rising day by day. And if Trump is re-elected as a United States the president, tariffs of approximately 10% on oil imports could increase the price of oil imports, and it may significantly impact the decline in oil demand and directly to the oil prices. So these three kind of things is the thing that we should be cautious of.
So speaking of that, I like it. So the Fed FOMC September 18, isn't it, Inki? September 18. So,
yes.
So
correct.
there's a lot of things, that's going to be dependent on that pronouncement. So what I heard is, if there's a confirmed interest rate cut, there could be a short-term opportunity for oil to strengthen its price. And I'm assuming that's the same thing for Bitcoin. I'm assuming that's the same thing for tech stocks, right? Obviously, these are
that's true.
riskier assets. They would love to have more riskier assets than those regular deposits, because deposit rates will go down as what interest rates will affect to the banks, right? So it's interesting. There obviously a little bit of correlation there, Miranda. You have oil strengthening, Bitcoin price short term. But I like the disclaimer again. If the narrative China continues to reduce its demand and whatever the prevailing economic conditions back then it can still create a longer term impact to the price of oil. Short term, good because of interest rates, but obviously if the narrative continues, it can just go back to where it was and continue to go down, right? Okay. Interesting. I'm now learning a lot today. Good job to me. All right. Okay. So I learned a lot about oil, right? But I would like to learn now about gold, right? XAU USD, right? And we spoke about, obviously, the dollar will weaken. So I already have assumptions that gold can also strengthen like oil and Bitcoin. But I want to hear it from both of you. Either or can answer. Right. So people some Kamirandas today, we have gold in our portfolio. Not just this gold, I have a gold here. Not just the one I'm wearing, right? But we also have gold in our portfolio, right? I would like to understand what are the main factors driving gold price at the moment? Because I want to buy. Go ahead.
Okay. So if you are focusing on the short-term gold prices, you need to look carefully at the monetary policy direction of the central banks for the time being.
Yeah.
In particular, especially, it is worth paying attention to when the Fed's rate cut will take place in earnest. So currently, the market expects the Fed to cut rates at the September FOMC, as I mentioned previously. And if the Fed's rate cuts begin in earnest in September, this will directly impact the short-term rebound in gold prices. And at the same time, it will dilute the dollar's value a lot. And another thing is the supply and demand of gold itself, just like US oil supply and demand. So last year, and I am seeing the data right now, according to the World Gold Council, WGC data, global gold production increased by only 0.5%. And before that, it also increased by 1.35% and 2.7% respectively. And it means that gold production has reached a top hill and is not showing any remarkable growth anymore. But on the other hand, conversely, the gold demand keeps increasing day by day. For example, the aggressive gold purchase by the central banks in emerging countries like China and India is supporting gold demand by accumulating gold for tremendous amounts. Like central banks is keep buying the gold itself. So especially the People's Bank of China purchased, I'm not incorrect, but more than 220 tons of gold last year. And this is more than a 22% increase over 2018. So we should look carefully about the emerging countries' central banks' reserves of the gold. And one last thing is the high probability that Donald Trump will be elected as a U.S. president. If he takes the throne, the global tariff hike and deregulation that he already mentioned could trigger very new but very serious inflation risks once again. And it could cause gold, which is a representative inflation hedge asset, to shine very, very, very brightly.
I like that. I like that. I like it. So I heard, again, September 18 Fed pronouncements. Gold obviously will have, it will have a strengthening effect to gold, and DXY dollar strength can go down. It will dilute the value of the dollar. Obviously, one thing I learned today is just on that statement that you said, Inki. So I'm gonna be very mindful on central bank pronouncements, like them buying gold. It will obviously have some little bit of effect and volatility effect to the price of gold at that particular time. And you mentioned about China. Interesting, they're buying gold, 220 tons, crazy. Last year, 2023, which is obviously an increase versus 2018, so people are buying gold now. Obviously, I'm sure it's my own opinion, probably to hedge, right? And maybe they're seeing a need to obviously hoard more, obviously with the economic conditions happening at this point. So I got that, and of course you said once again, which is present in almost all. You have Bitcoin, you have a little bit of effect to oil, and now to gold. The Trump election because of tariff, because he was very vocal about it, right? He will tax, huge tax, because he wants to make America great again, according to him, right? All right, it's very skewed to the U.S. Okay, so anyone can answer this again. Let's go to my next question, right? So if these are the things that are happening, you have your geopolitical concerns, right? You have your Trump, of course, it's in the picture, FOMC in September. Is the investor sentiment affected? Are they more biased to positive, negative? What's the effect to the investor sentiment over the past few months towards gold?
Okay, so first of all, current geopolitical risks in the Middle East region from last year have raised the gold price higher, as all of the traders might already know. And Investors have placed greater focus on gold's role as a safe haven asset, which is giving some kind of bumpers to the market risks. But starting in the second half of this year, I mean, starting from July, gold's role as an inflation hedge is receiving more attention to the market. This is because I should repeat it again, but Trump's chances of winning the presidency have increased significantly, and concerns are growing very rapidly, that his presidential promises could lead to new inflation in the United States. Of course, we should pay more attention to the FOMC result in September before that. If the Fed determines that current inflation in the United States is steadily slowing down, and if the United States economy shows some gloomy signs of it, then the Fed will eventually cut the interest rates, which could impact the weakening dollar and at the same time push up gold prices in the short term. So for the short-term traders for the gold, you should be aware of the fact that the Fed will cut the interest rate in FOMC. And if you are a mid to long-term traders on the gold, you should be careful and be aware about the Trump's winning of the presidential election.
So, Kamiranda, with that said, right, it looks like, at least, again, this is my own opinion, it sounds like there's a common denominator between gold, Bitcoin, and oil, right? So I want you to tell me, if you're watching me right now, people in TikTok, hello to everyone there. Hello to each and every one of you. There's so many people watching in TikTok right now. Louis J, Madison Jewel, Juwong TV, hello. Mamo Cypher, hello. Faustina White, hello to everyone. I would like to ask you, and of course, if you're watching in YouTube, in Twitter, in Facebook, can you please comment down below, right? Or type number 1. Are you already trading gold today? Type number 2 if not yet. And type number 3 if you are interested to trade gold. Because I feel like I want to. At least my own opinion, gold is a bit, there's a little bit of regulation there than Bitcoin. Because Bitcoin can just crazy volatility, right? And I remember there's a running joke. So Bitcoin, or let's say Ethereum, can go down 10%, right, in one day, for example. Imagine if it happens in one country. That country probably would have shut down their economy already, right? I mean, imagine the price of your coin going down 10%, right? And imagine it happens, let's say, to an African country or an exotic currency. If it fluctuates like that, this is not FA. It's probably the economy has shut down. I was like, oh, really? But that's the reality, because these are obviously currencies of countries, and people rely on them. And I remember this story, Kamirana, just a little bit of story, Inki and Xing. I remember this story, there is this one old man from Lebanon, another man from Turkey. The crazy inflation in those countries, right? So, one old man at 55 years of age, and he's already running towards retirement, right, at 55. And he has savings, I think, around 5 million lira or more. And when all of a sudden, I think it was a couple of years ago, the currency devalued to almost 70+%. And he was like, one time he woke up and his 5 million bank savings preparing for his retirement is already 70% off. Imagine, right? It's already just worth 1.5 million lira just because of the currency devaluation. So that's how important understanding your value of your money and the economic factors affecting the valuation of your money. Because, politics, pronouncements, economies, how is your economy run, your government printing a lot of money, right, and stuff like that. This can devalue your money long term. Yes, they will print more money, yes, right? Especially when there was the gold standard was removed around 70s, right? So, now they're printing and obviously it will devalue your money long term. It's what's happening in all of the countries right now. So the narrative there is that, if you're a 50-year-old man, do not just put your money in the bank, right? Hedge, for crying out loud, hedge, right? You need to have, not again, it's up to you. You're the ones watching me. This is my own opinion. You gotta hedge. Whatever assets you want to, it's up to you. But for me, It's not just okay to put your and I created a Facebook post, Inki and Leasing earlier about this. Imagine if you have a 1 million peso in your bank, pesos, in 10 years, if you're earning a 2% annual interest rate, but your adjusted average inflation rate is 3%, your money would have been 1.25 million pesos already after 10 years. But in today's value, that would have been 990,000 already. So you'd imagine it's adding peso to the bank account, but the real value, the inflation is fighting over your interest rates, right? Which is crazy. So this is the reason why my show exists, giving people options. Of course, it's your risk appetite. We want to give you options, right? You want to hedge your money, and of course, gold. Everyone buys gold, Bitcoin, digital gold, and of course, it's up to you, Miranda. So at least I just want to share that because it's the real story. It's real life. People get affected. And again, as I've said, imagine, if these currencies fluctuate 10%, one thing for sure, either, the president or, the economy is shut down already, which is crazy. Unlike in Bitcoin, dump 10% just for speculation. It's crazy, right? So anyways, type number 1 if you learn something on that. So people have type number 3. A lot of people typing number 3, which means they're interested to trade gold already. Franco, Bendy, Joey Galang, JP Dakigan, Mist Juan, Mark Sonza, Lakan Anonymous, Mark, of course, Goma, thank you. That's a lot of people typing number 3 here. You want to trade gold already. Joey Galang, RNR Brothers, because I want to trade gold tomorrow already, right? Okay, let's go back to our topic. So, of course, we spoke about geopolitical risks as it affects, oil. But in gold, is there an effect on geopolitical risks and uncertainties in the XAU USD market?
Okay, so let's go back to the Russian invasion of Ukraine. So Russia's invasion of Ukraine and the Middle East collision have all rapidly increased the demand for the safe haven assets. And these caused the gold price to rise very rapidly. And ironically, gold investors and traders must have enjoyed this situation. As such, gold tends to react positively to the unstable situations and some kind of instability. And this is because while central banks, especially the Fed, can print an infinite amount of dollars, just Coach mentions, I mean the paper money, gold production does not increase indefinitely. Now, that interest in geopolitical concerns in Middle East is slowly decreasing. Gold investors should pay more attention to the economic conditions in the United States and China, in addition to the factors mentioned above. For example, if the US economy enters a recession phase or its side effects begins to appear in the United States, gold demand may rise once again, and it could positively impact the gold prices.
So just a quick follow-up on that. So, in your standpoint, right, Inki, I'd like to understand from you the major risks and opportunities, right? Because obviously there's geopolitical, right? So what are the major risks and opportunities for investors, not just traders, in the gold market today?
Okay, I want to highlight the characteristics of the traders. So mid to long-term traders need to focus more on the possibility of Trump being elected president and the resulting risk of a re-rise in inflation. The inflation risk resulting from his election will greatly increase the attractiveness of gold as an inflation hedge asset, which means that gold may shine very brightly again due to the inflation risk emerging after the Trump's election. But if you are a short-term gold trader, your immediate focus should be whether the Fed will cut the interest rate in September in earnest. If the Fed acknowledges a deflation situation in the United States and decides to cut the interest rates, mentioning of some kind of gradual slowdown in the US economy, this could put significant downward pressure on the dollar and that would lead to a relative advance in gold prices.
Oh my God.
Yes.
I Camiranda, type number one, if you would like them to be a guest in our show again. Oh my good. It's like I took a master class already. There are things that you already, the feeling, Inki and Xing, that there are times that you know it already, but if you hear it from someone else, it's like it's still an aha moment, right? Because
Yes,
sometimes
we
you
have a
hear,
lot. Yeah.
right? Sometimes you're hearing your thoughts, and sometimes it's different. The feeling is different if you hear your thoughts. Someone saying your exact same, validating your same thoughts, right? So a lot of people are saying here, they want you to become our guest again. Prince Sakang, JP Dagikan, Alan Works, Shinobu, Lemuel, Bullish, Brian, Francis Ray, Momo. A lot of people wants to be a guest again. Arya, Joey, Goma, Ben B, Martin, Francis, Roger. I cannot stop reading anymore. And someone said solid learning. So they learned a lot. All right. Someone said Miss Leasing is very beautiful. He cannot focus.
Thank you.
All right. Bullish had confluences. Oh, nice. Solio, guest again. Bien Calma, guest again. Okay. So Jose, I'm not sure if you guys can still answer, but Jose said, Coach, what's the effect of the jobs report in the market just released today? It's actually Bitcoin is good right now. It's 65,300. I don't know if you guys want to bubble, but my own opinion is if the employment report says, people are losing jobs, right? Then, the government needs to pump the economy, which means they need to cut interest rates. They need to do the monetary policies that can support more jobs. And how do you create more jobs, right? Of course, it's going to be those monetary policies that are not contractionary but expansionary monetary policy, and that includes obviously. I think that's what's driving right now. A little bit of that driving is driving Bitcoin right now. When we started the program, right now Bitcoin is 65,300. A little bit of good FA there. It was released 8:30 in Manila time PM, Manila time, Singapore time. I don't know if you guys would like to add anything. Feel free while I'm reading questions here.
Yeah, I think to add on to that, for the jobs report, I think it has been ongoing that we are seeing a softening in the U.S. labor market. So I think the main point with this is that it furthermore cements expectations on the Fed rate cut. Like Coach, like you just mentioned, previously it was a 25 basis point rate cut, but with the most recent conference, markets are increasingly pricing in a 50 basis point rate cut, and this is a very big shift from the narrative that we're hearing in previous conferences where the Fed has been very reluctant in providing a timing on the rate cut. But right now, with the latest one that we're seeing, they are signaling or prompting that if inflation is going down and jobs market is continuing to be weaker, then that's pretty much said that we could see a rate cut in September. So I think that a shift in narrative, it's also weighing on the dollar, and that it helps in pushing Bitcoin prices higher.
No, and I like your answer as well, because obviously, a follow-up question here from Ramon. How does inflation rate affect interest rates? I'd like to answer this. And what's the rationale behind in the relationship? So obviously, guys, when you raise interest rates, you're going to raise interest rates of deposits, of credit, loans, etc. If you're a businessman, if your loans interest rate will double, triple just because the Fed is going to raise all of interest rates, then you will not borrow. So if you don't borrow, then your production, manufacturing, everything else, if there's no borrowing in the economy will slow down. Why is the Fed doing that? They're doing that. They want to slow down the economy because people, if the price of products are higher, right? Because the cost of production is higher, cost of borrowing is higher, then no one will buy. If no one will buy, the demand will go down. If the demand will go down, inflation will go down. You guys see my point? So there's obviously, the way that monetary policy work is to kill the demand. When there is high inflation, monetary policies will raise interest rates. Now in reverse, if there is obviously you're seeing to Leasing's point, jobs deterioration, employment, payroll numbers, right? PCE, CPI. If all of those are saying, hey, no one is buying goods already, right? We need to spur the demand. So what the Fed will do, the Fed is going to reduce interest rates to encourage people to borrow. And when there's borrowing, manufacturing will go high again, big again. People will now buy because the cost of goods will go down. It's like a cycle. I mean, you want to add anything there, Inki or leasing?
Yes, that's true. Because before we start the session, Coach and I have discussed like 15 minutes in the offline, and we talked about the PMI of yesterday. Yesterday, PMI was like plunged a lot, and in the same narrative, the NFP report today has the same meaning with the PMI reports. So it means that United States economy is kept declining and plunging over and over again. It means that it gives a lot of chance for the Fed to decrease the interest rates. So that's why the 50 BP cut, the probability is getting higher and higher and higher. Yes.
Interesting, right? And then, all right. As per Ryan Marvin, what is the significance of commodities that are going down, especially on oil and energy? What's the effect to dollar or economy on how to adjust our portfolio when this happens? Okay, I'm not sure if I understand, but I think the question is, how can you maximize exposure to gold and oil as it is affected by the dollar? So if dollar goes down, obviously if interest rate goes down, the people who wants to hold dollar will not hold them anymore because the deposit rates is down, right? So the attractiveness of dollar will not be good anymore. Therefore, they will not hold dollar. And if the dollar DXY, the index goes down, this is just me talking and not my guests, right? But for me, there's an inverse correlation between Bitcoin and DXY. If DXY goes down, Bitcoin goes up, right? So if the interest rate goes down, naturally the expectation is the inverse assets will go higher just because people will not hold dollar; they will hold riskier assets already for them to hedge against value of their money, right? I don't know if you want to add anything there, Inki or leasing. I'm seeing you like nodding.
Yes, I totally agree with your idea. So if you want to start your trade, if you want to buy like commodity like oil or like metals like silver or gold, you should remember that they have the inverse direction with the dollar. It means that if the dollars goes up, this kind of commodity goes down. And if the dollars comes down, this kind of commodity prices goes up. You should remember this as a formula. Yeah.
Love it. All right, you know what? The time is so fast. We have already almost consumed 55 minutes of talking. We're like, awesome, folks. Inki and Leasing, thank you very much, for your time today. I am very, very happy for, what we have educated our community. And I appreciate you guys for really helping educate our Camirandas who are obviously awesome active traders right now. We can rarely count passive traders. Almost everyone is active traders here. And I hope that we're able to give you guidance, Camiranda, on how, obviously not the financial advice, is up to you still. We don't know your risk appetite, right? And we hope we're able to educate you on those questions. Any few words before we part ways, Inki and Leasing? Inki first, go ahead.
Okay, so Coach, thanks for having us here. So it was a great time to speak about ourselves and speak about our market insights that we have. So if we have another chance like this, please invite us and we will do our best to introduce our market insights to the subscribers of yours. And I want to talk more with you about the markets. Okay, thanks a lot, Coach.
Thank you, Inki. The pleasure is ours. Leasing?
Yeah, thank you so much for having us, Coach. It's been a real pleasure to be on this show, and I really enjoy just bouncing ideas on our views on the market. So I think this is very helpful and also very helpful to your viewers as well. So thanks for having us on this.
All right, Miranda, let's give them a warm round of applause. Thank you very much. Bye, guys. Okay. All right. If you learned something in our episode for today. Please don't forget to click on like, subscribe, and follow us in our show. If you would like to obviously get to understand Exness, I've actually shared the link below to understand further, and it's up to you guys, Miranda. No? So thank you again for Exness for helping us come up with this very educational show, and it has been very awesome. I learned a lot of things, Miranda. I wrote them down. Now I will take note. No, I already know all of this. No, type number one if you're happy. It looks like naman that, I don't know, but it sounds like that we're on the same page. Can you please type number one? Your coach is able to make sabay of them. It looks like we're on the same page, and I'm happy that we're on the same page because it tells me that I'm giving the right inputs to our Miranda community. So on that note, marami pong salamat sa inyo. Again, thank you very much for Exness for helping us come up with this very educational show. I learned a lot, especially on oil and gold, right? We don't speak a lot about oil and gold, but I learned about China demand, election, Mt. Gox, the supply and interest rates. For gold, I saw obviously for gold, I see central bank buying as a driver. And of course, for oil, you have OPEC and China demand, and of course, volatility as it is affected by FAs as well. All right, current price. Let's actually quickly review the price of our coin for today before we go ahead and say goodbye to all of you. Okay, just give me a second, Miranda. Before we go, a quick review of our coin prices. Let's go. Let's do this.
A quick review of our top 10 coin prices, fundamentals, and macros brought to us by the Global Miranda Miner Research Group.
All right, just a little bit of review, Miranda. Our current price, our current market cap is down to 2.33 trillion. Ang laki po ng binaba nito. 2.40 na po ito before, no? And you see the volume is actually higher, not because of people buying, but there was obviously selling happening, Miranda. Bitcoin currently up, grabe, no, Miranda, no? Nung kagahapon, umabot ito ng 62,000. Ngayon, umakit na naman ng 65. Ano ba, Bitcoin, ano bang gusto mo? No, ito ay gumagawa ng inverse Exness, no, inverse a head and shoulder pattern for me, no. Ethereum 3158, PNB 574, Solana 166, XRP 0.57, Dogecoin 1193, Toncoin 665, Cardano at 3852, mga Miranda. Let's just quickly check the price of gold. Oh, we're checking gold na, galing na, no. All right. Alright, current price is 2468. No? Last time I checked was $2,000 lamang. Ngayon 2468 na po si XAU USD. Let's actually check on US oil. Let's now check. Alright, current price at $73.66. Pinag-aaralan po natin to. We're actually talking about this, no? And we have been talking about US oil for quite some time as well. And obviously, the price of US oil is currently $73. Of course, XAU USD gold is around 2,460 plus, Miranda. All right, let's go. Let's do this. Maraming po salamat again. Thank you everyone for the show. If you've learned something, huwag kalimutan mag-like, subscribe, at nagugustuhan ko ang aking live. Napakalinaw, napaka-crisp ng aking connection. Kung na-appreciate mo yan, pa-follow naman, ha? Pasabugin ng like, Miranda, at mag-follow po kayo. Mag-share din ng kayo, Miranda. Salamat po. Love you 3,000 at shalom. Salamat. Hello mga Miranda. Maraming salamat po sa inyo dahil tinapos yung ating content for today. Kung kayo po ay merong natutunan at tingin nyo ang inyong mga kapamilya, kamag-anak, kapuso, kapatid ay makikinabang sa ating content, please don't forget to click on like, subscribe, and of course, i-follow nyo na rin kami sa aming mga social media channels, mga Miranda. Ito po ay makakatulong para we can further disseminate our content to the larger population. Muli, maraming salamat po. Shalom at I love you 3,000.